QuickBooks Pro Desktop 2021 Sales Tax and Bank Feed Overview. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our bank feeds test file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We've been thinking about how bank feeds can fit into our accounting system. We now want to think about sales tax. What if we are subject to sales tax? How will the bank feeds fit into the system in that case? Now, in the United States, sales tax will typically be a state type of tax as opposed to a federal type of tax. Therefore, it will differ from state to state, locality to locality, and it will typically be imposed in some form of inventory item. In other words, typically service items, things that aren't inventory related, will typically not have sales tax. If you have an inventory item, then you may be subject to the sales tax. And if you're selling inventory, then the question is, how are you going to fit in the bank feeds into that type of system? There's a few different ways this could work, and it will depend in part on what type of business we have. For example, we might have a system where we want to create the invoice, track the accounts receivable. We expect to receive the payment in the future and then basically make the deposit. Or we might make basically all of our sales like in the store. That would be something like a food place or a restaurant or something like that. And then we're going to collect the payments and make the deposits. Or we might have a system where we're basically making sales and we don't want to record a sales receipt or create invoice, but somehow want to depend on the bank to clear the deposit in the bank and then use the bank feeds to create the deposit. But if we have to charge sales tax, that makes things complicated to use that type of system. So let's think about the full service system first. If we create an invoice that increases accounts receivable, the other side goes to sales, then we would receive a payment, which might go into undeposited funds if we need to group those payments, and then we would record the deposit. So the first way you can do this is to do the full cycle and then use the matching process in order to basically match the deposit at the end of the process. So that's one way you can do it. The second way is you can enter the invoice and then you can receive the payment, and you can basically record the payment into undeposited funds at this point, or you can put the payment into the checking account. Either way, you can basically match the bank feeds. Then you can wait till the bank transaction clears and match them to the receipt payment time. Or you can create the invoice and then not record the receiving of the payment, and you can use the bank feeds once the payment clears the bank, as long as it's grouped in the same format as the invoices are. So every deposit would have to be, they couldn't group the deposits together. Then you can basically match the deposit to the invoice at that point. And that could be a little faster, but you got to be careful that the matching all will work up. The other way you could do it is if you make your sales in the store, then basically you can tie the deposit to the sales receipt. But again, if you're making sales in the store, you got to make sure that the deposits will match up to the individual sales you're making. Otherwise, the grouping, the matching won't work. Or you can create the sales in the store, make the deposit to the bank at that point in time. Like if you're collecting cash, deposit it into the bank so you recorded it on your side, and then you would use the matching principle or the matching system in order to match the deposit. So you'd be matching it at that point, not depending on the bank. Now, if you didn't want to record either of these items and you want to just say, hey, look, I just want to sell stuff, and then I want to wait till it clears the bank, and I'm just going to record all of the income I get, all the deposits as income. But then you have to calculate sales tax. Well, in that case, you could simply record all your sales and include the sales tax in the price of the sales that you are including, and then possibly calculate the sales tax that would be on it and you would take that amount out of the sales line item. So let's think about those three items. Let's first turn on the sales tax. Let's think about turning on the sales tax. There's a couple things you got to do to turn it on. We would go to the edit dropdown, preferences, and then you want to go to the sales tax item, company preferences, and then we're going to say, I want to turn the sales tax on. Then you need to set up a sales tax item, and this will be dependent on where you are, so who you're going to be paying for sales tax. I'm going to set up basically a generic sales tax item here, and I'm going to say, so this is a sales tax item, and I'll call it sales tax California, and I'm going to call it description sales tax. I'll put California here. And the rate I'm just going to say is 5%, just a generic rate. And the agency, California Sales Tax Collector. Now, again, that's a generic name. I'm just putting a generic example in here. So we then have the quick add. This is going to be quicking adding a vendor because that's who we're going to be paying, the state, on this. So we'll quick add that, and I'm going to say OK. And so there's going to be our item. I'm going to close that back out and make all existing customers taxable. This is going to be the other item, and that by default you would typically, if your customers are like the end user, then you would think they would all be taxable unless they are not subject to the tax for some reason. So that's the other item that you want to have on there. So usually I'd say, yeah, make all the customers taxable. Make all existing non-inventory and inventory parts taxable. So I wouldn't want to do this because the non-inventory parts I may not want to make taxable, right? The service items might not be taxable. The inventory parts, yes. So we'll take a look at that item next. I'm going to say OK. And then I'm going to say OK. Then the item, now let's open up the company window again, the homepage, company homepage. And there's a homepage which I will maximize. Then let's go into our lists dropdown and take a look at the item list. We want to take a look at the item list that we have now. And now we have our sales tax item. So now we have this sales tax item here. Now we have a couple units that we want to sell. Let's create an inventory item that we're going to sell. If I say I want a new item, and then I'm going to say this is going to be a inventory item, and so I want the inventory item to be taxable, and I'm going to call this inventory item 1. And so I'm going to set this up, and I'm just going to call it inventory item 1 in the description. And there it is, and the cost for it, let's say, is $100. And cost of goods sold, and then the vendor, and then the sales price, we're going to say we sell it for $175, and it is taxable. This is going to be the item that's sales tax, that we're going to apply sales tax. And then we're going to have the income account. I'm going to put it to sales for the income account. And now we've set up our item. So this is part 2 that we need to do, typically to run sales tax through the QuickBooks system. Then we'll say OK. And so now we have our inventory part. Now, if I go to the home page now, the third piece is to make sure that your customers are taxable, which you saw that was done in the setup process. And then if you have any customer that's not taxable, then you want to make sure to assign them as non-taxable. But generally, most customers are taxable if they're going to be end users. The thing that's going to drive whether you are taxed or not will then be the item. And if it's an inventory item, it's more likely to be subject to the tax. So then when you create like an invoice, if I was to create an invoice, say let's make an invoice here, and then I'm going to minimize this window, and I'm going to type a new customer. I'm just going to call him customer 1. And so instead of making a name here, I'm going to quick add the customer. And so we'll keep the date. I'll say 05/30/20. And the terms, and then the item, this is the item that we're going to set up, the one we just picked up here, inventory item 1. I don't have any on hand, so that's okay. And the quantity I'm going to say is 1. And so now you can see it's going to be subject to the sales tax here, and this will calculate then the sales tax at the point in time that we made the sale. Now when I record this invoice though, it's going to increase the accounts receivable item. We're not getting paid, so we're doing an accrual type of transaction. So this would be the full amount plus the sales tax that we would have included, and then QuickBooks would calculate the sales tax. So if I said save and close, and say yes, and one or more items have not been assigned to a class, save anyway. And then I'm going to go up top to our reports, company dropdown, and let's take a look at the balance sheet. So I'm going to change the dates up top and the customize from 01/01/20 to let's say 12/31/20. Run that report. And then we'll go up to the reports, company profit and loss report, and say we have 01/01/20 to 12/31/20, and run that report. Now within the now if I go up to the balance sheet here, what happens with this? We know the accounts receivable is going to go up now. So now I have an accrual type of activity. The accounts receivable, that's for the full amount of the invoice. We know that the other side is going to go to the profit and loss. So the profit and loss is now going to be increased by sales. This is the amount there. That does not include the sales tax. And then we'll be tracking the sales tax. QuickBooks will now track the sales tax on the balance sheet in the sales tax here item. So now we're tracking it within QuickBooks and we'll be able to pay it. So QuickBooks does the calculation. Also note that we have this negative inventory now because we're tracking inventory here because I set up inventory in that item. Now you might say, hey, look, I would like to set up the inventory outside of the system rather than tracking the inventory within the system. So if that was the case, then you could set up the item over here, and instead of adding an inventory part, I could say I want to go to the new item, and I'm going to say new, and I'm going to assign it to a non-inventory part. So in this one, I'm still going to assign sales tax to, but it looks more like a service item. So this is going to be sales tax item. So an item subject to sales tax that we're selling here. And now we just have the price that we're going to have. Let's say this one's for $250. And then I'm still going to sell it to sales because we're still selling something that is sales. It's just that I'm going to record the tracking of the inventory not through the system, but I'm going to record it periodically. So if I do this one, same system, except that we won't have to deal with the inventory. So if I go to the Home tab and made an invoice for this one, I'm going to say customer 1 here, and then I'm going to say it's a sales tax item. You can see the tax will still be calculated here, but this invoice will not be decreasing inventory because we're not tracking inventory within the system. We're going to do it on a periodic basis outside the system, as we saw we talked about that in a prior presentation on inventory. So closing that out, and I'm going to say I'm not going to record this one. So now we've entered the invoice. That increased the receivable. What if I just wanted to wait now to have it clear the bank instead of me recording the payment manually and then the deposit? I could then go, okay, let's go to the bank feeds now by going to the banking drop down, bank feeds, and then go to bank feeds. Go to uncategorized items. I'm going to hit the cog here and include the type. Close that back out, sort by type. And then I want to see the checks up top. Now, these are obviously, this isn't the check that we received, but let's imagine this was the check. So then we could use the matching feature. I can go here and say I want to add, I want to match here. I like to go to add more details, and then I would go to the second tab up top. And in the second tab, we see the invoices. So we can then match the invoices out. And when we match the invoices, it will then record the transaction, increasing the checking account and decreasing the accounts receivable. So that's one way we could fit it in to a system that's basically using the accrual process, and we might be able to save some time, but you got to make sure that when you enter the invoice that the deposits are going to be clearing the bank in the same format that the invoice was created. You're not batching the deposits together. The other way we can do it is then say I'm going to go to receive payments. So I'm going to go to the receive payments and record the receipt of the payment in some way. So we're going to say, okay, we got a payment from customer 1 here, and let's say it was, cash or whatever, an electronic payment of some kind. I'm going to check it off and say that we recorded it on our side. So there's the payment we have received, and the default up top means it's going to go into undeposited funds. And so it should be okay if it's in undeposited funds. It should still pick it up. So this is going to decrease the accounts receivable recorded in undeposited funds. So I could say save and close, and yes. And then if I went to my balance sheet, then I'm going to say refresh that. We've got the accounts receivable went back down. So the accounts receivable now went down, and we put it into undeposited funds. Now we got to move it from undeposited funds to the checking account, which normally we would do by going to this item where I have the little number 1 here, but we can use bank feeds on that step. We can go to bank feeds and say, okay, now I'm going to try to match this out. I'm going to pretend it cleared the bank now, and I'm going to match that out. So let's go to add more details. I'm going to go to the matching side, and now I've got this payment. So I can match it to the sales receipt in essence now. So I can do it in that step. I can use the bank feeds on that step. So I can close this back out, and so I can wait till it clears the bank, and then if I was to check that one off, it would then take it out of undeposited funds and it would put it into the checking account. Okay, next option. We could have this received payment go directly into the checking account and then use the matching feature. Or we could make the deposit over here and use the matching feature. So for example, if I want to turn on that feature, I can go to the edit window up top, go down to the preferences, and then I want to go to the payments tab, company preferences, and I want to turn this item off. So I have an option of not using undeposited funds, and then say, okay, it's going to close all the windows. So I'm going to say, okay, close all the windows. I'm going to open all the windows back up now. So company, homepage, I'm going to maximize the screen. And then I'm going to go to this sales receipt, go to the sales receipt. I'm going to go to the prior receipt we made, which was the only one we made. And we should see in the window here, now I'm going to say I don't want it going to undeposited funds. I want it going into the checking account. So now I've got this option to put it into the checking account. So now if I say save and close, and I say okay, and I go to my reports, let's just go to the trial balance now, because I'm going to have to do this, close the windows again. Trial balance for the period 01/01/20 to 12/31/20. Now that amount went directly, there's no undeposited funds, it went directly into the checking account with the sales receipt. So we should have a sales receipt or a payment here, not a sales receipt, a payment for that amount. And then it decreased the accounts receivable on the other side. So now it's already in the bank account at that step. And we can basically verify it with the bank feeds, which would basically be helping us with the reconciliation process. It would just basically be reconciling that it did indeed clear the bank. So then we can go to the banking dropdown, bank feeds center. I can go to the uncategorized items. I'm gonna say that this deposit now, I'm gonna pretend this was the deposit that cleared. Add more details. I'm gonna go to the matching section, and now I have the payment here again. So now I've got the payment that has been recorded, but this time that payment recorded it directly into the bank account. So if I was to click here, it wouldn't actually do anything. Assuming the payments was matching the payment that cleared the bank account, it wouldn't actually do anything, but it would help me with the reconciling process at that point. So those are the options there. If I go back to the home page, then you could do a similar thing with the create the sales receipt, right? If I was to create a sales receipt, and I'm going to say, all right, let's do the sales receipt, and I'm going to say this is going to go, I'm going to minimize this and say this is going to go to customer 1. And let's say we got cash. Sales receipt's going to record the cash receipt at the point in time of the sale. And let's say we do this sales tax item 1. So we're not tracking the inventory in the system, but the system will record the sales tax, which in this case is the $12. Let's say this time it's 2 of them. So now it's the $25 and the $5.25. So if I record this, I'm going to say save and close. This would be like something we sold at the register now. And so if I go to my trial balance, I'm going to say, okay, now we have the undeposited funds that increased again. So we didn't put it right into the checking account. We used this undeposited funds again. And then the other side went into the sales, which is going to be down here. If I double click on the sales, there's the 500. The difference went to the sales tax. So the sales tax is going to be a liability right there. So now we're tracking the sales tax in the system again. If I go back to the home page, the next step is to then record the deposit, as you can see here with the deposit item. But you might want to wait till it clears the bank, and if you might have a matching problem to do that if you're collecting cash, because you might group multiple sales items together. But you should be able to match up to the sales receipt if you wanted to do that. So we can go bank feeds, and then I'm going to say let's match it. I'm going to go to add more details and then match it over here. And then I want to see all of them. And then we've got this, we've got the receipt. So this is the sales receipt of the $5.25 that we can match out. So we can wait till it clears the bank and match it out if we so choose. Closing this back out, back to the home tab. We could go to the sales receipt. I can go back one. And then instead of putting this into the undeposited funds, I could do the same thing and put it to the checking account, which would be the same thing as we saw with the received payment. So it would still match it, but this time no transaction would be recorded if we matched it out exactly, but rather it would help us with the reconciliation process. Or we can deposit it, and we could have done that same step here, now making the deposit, and this is more likely something we would have to do if we're grouping the deposits in some way different than individual sales. And then I'm going to say I'm going to group the deposits together and then save and close, and this would be more of a full service type of transaction. And then that would take it out of undeposited funds now to zero, put it into the checking account, and then we can check out the checking account, and that should be the items that we clear out, just matching it once again to the checking account. So if I was to say, okay, let's match it here, add more details, and match it. So I'm going to say all transactions. So now we would be matching it here to the actual deposit. So those are the ways we can actually use the calculations within QuickBooks, and QuickBooks would then be calculating the sales tax, and then we could pay the sales tax within the system. Now, what if you didn't want to create a sales receipt or create sales invoice at all? You just wanted to basically collect the payments. Well, it's possible then that then all you would see then on the bank feeds is the payments, and you would say, I'd like to just record those items into sales and just record them all as sales, but I got to deal with the sales tax if I was to do that. Well, if you do that, then you could say that you wouldn't be using the sales tax widget. Then, in order to do that, you'd have to manually calculate basically the sales tax. So, for example, if I go into the sales item here, if you were to charge for this item and see how we calculated the sales tax, say you wanted to charge $175, you would have to make sure that you charge when you bill somebody the $183.75. So you're charging them including the sales tax. If you don't use the invoice or sales receipt, QuickBooks isn't going to help you to do that, but you can basically figure it out. So you just set your prices to include the sales tax item. So to figure that out, note you can then say that like this is my sales price is going to be $175. I know the sales tax is going to be 0.05. So then if I add, that's going to be a percent. So the sales tax is going to be this times this, and that's going to be, if I add some pennies, 8.75 about sales tax. So the price that I'm going to set then is going to be 175 plus the sales tax price. Or in other words, you can take the sales amount, sales of 175, and then say this is going to be 1.05, which is 105%, including the sales tax. So, and then you're going to say that that your price that you're going to set is this times the 105 would get you to that 184. So that's one way that. So then you would charge including the sales tax, and then all of your income then. If you recorded all of your income that you had received that way as simply you just waited till it cleared the bank and then you recorded it all as sales income, then you'd have to go to the trial balance or the profit and loss, and you would take your sales number, and let's pretend that sales number now includes sales tax because you've included sales tax, and then the government comes in and says you've got to pay us 5% of the sales. So, and you got to do your sales tax and pay it basically monthly or quarterly or yearly, depending on the circumstances. Then you'd have to say, okay, well, how do I do? If this whole thing is subject to sales tax, then how much do I owe the government, right? And you could say, well, that's $755 that I collected total. So $755 that I collected total. It's not just 5%. That I owe to the government. I have to do this similar kind of calculation to kind of back into the amount that I got to pay the government. So you got to say, okay, the government says that I charged 5%. So they strong armed me and said, that I got to charge the 5%, and now they want that money. How much would it be? Well, I want to do the same calculation, sales, and this would be kind of like the unknown number in total. And then I'm going to say the rate is going to be here, which I know is the 105%. And I'm going to say that's the 105%. So the price that we charged then is going to be this times this, right? And I know the ending number needs to be the 755 because that's how much we got. So we got the 755, and I want to back into this, the sales amount here. Now we can do that algebraically. Excel has a nice feature to do that. We can go, if I put my cursor off the cell and I go to data and I go a what if analysis and I use this goal seek feature, I can say, I want you to set this cell to be the value of 755 by changing this cell. So make that cell, you're telling Excel, make that cell whatever it needs to be to make the bottom line 755. So I'm going to say, okay. So there it is. So there it backs into it, right? So I can double check this and say, if I had 719 was the sales price and I charged sales tax, included the sales tax at the 105, and then I multiply that out, then I'm going to say 719 times the sales tax is that. That means that we owe the government of this 755 minus the 719, we owe the government 36 and some pennies, right? And that's a little bit different than the 755 times 0.05. You can't do that. It's a little bit different number. So you got to kind of back into it. So then you can record that and say, okay, once you then have your sales of the 755, then you can record your sales tax items, which would basically be when you pay the government, then the sales tax on a cash basis, you would be paying them. You can do this calculation, and you would be paying them the $35.95 in this case, if that was the proper calculation, and then you can adjust your sales back down, meaning you then can do a journal entry decreasing sales for the sales tax payment. In other words, when you pay the government, this will clear the bank for that cash amount. When it clears the bank, then you record it as it'll hit the bank feeds, right? It'll hit the bank feeds over here. Cash will go down, and the other side will be a decrease to sales. So instead of having an expense, you'll decrease the sales because your sales are overstated, because you're not recording the payable in that case. You're overstating your sales by the amount of sales tax, which isn't really yours. You got to pay it to the government. So in that case, if you were on a cash basis, you would be overstating sales here. You'd have to do your calculation for the sales tax, backing out the sales tax, like something like this. And then when that clears the bank, if you were going to wait till the bank feeds to clear it, cash would go down and you would decrease the sales. Now, you would have a timing difference there from an accrual basis to a cash basis to calculate your sales. And once again, you can kind of rely on the tax preparer at the end of the year. You could say, I'm doing a cash basis. This is what I'm doing. Make any adjustment. I think, I'm doing what I do to be on a cash basis and basically pay the sales tax. You make any adjustments you need to do for the accrual process for taxes and or financial reporting at the end of the period. So those are just a few options how you can use the bank feeds. And note that when you're using the sales tax, you can use these two items to calculate the sales tax, but then you have to think about how you're going to match the items. You're kind of moving away from a cash basis when you do that. And you also have to consider how you're going to be dealing with the inventory, which again, we talked about in a prior presentation.